Have you ever heard the phrase, "The stock market is risky"? Well, it's true, but it doesn't mean you can't make it work for you. Successful investors don't eliminate risk, they manage it. And today, I'll show you how to do exactly that. Whether you're a beginner or an experienced trader, this video will give you actionable tips to manage risks and protect your hard-earned money. In this video, we'll cover what is risk in the stock market, the importance of risk management, practical strategies to minimize risk, common mistakes to avoid. Stay till the end for bonus tips on developing the right mindset for risk management. First, let's understand what we mean by risk in the stock market. Risk refers to the possibility of losing your money due to factors like market volatility, poor stock performance, or unforeseen events. There are different types of risks. Market risk. The overall market can go down, pulling most stocks with it. Company-specific risk. A company may face financial trouble, impacting its stock price. Liquidity risk. You might not be able to sell your stock quickly. Sector risk. Some industries like technology or real estate are more volatile than others. For example, if you invested in a technology stock during the 2022 market downturn, you likely saw significant fluctuations. This is market and sector risk at play. Now that we understand risk, let's talk about why managing it is critical. Without risk management, you could face loss of capital, missed opportunities due to emotional decisions, a lack of financial security. Good risk management allows you to invest with confidence, stay in the market longer, and build wealth sustainably. Warren Buffett famously said, "Rule number 1, never lose money. Rule number 2, never forget rule number 1. This highlights the importance of managing your downside. Don't put all your eggs in one basket. Diversification means spreading your investments across different asset classes, industries, and geographies. This reduces the impact of a single poor-performing stock. If you invest in tech, healthcare, and consumer goods, a downturn in one sector won't wipe out your entire portfolio. A stop loss is a predetermined price at which you sell a stock to limit your losses. It's like an exit plan for when things don't go as expected. If you buy a stock at 100 rupees, you might set a stop loss at 90 rupees to ensure you don't lose more than 10%. Never invest money you can't afford to lose. Always have an emergency fund and avoid using borrowed money to invest. If you have 1 lakh rupees in savings, consider investing only 50,000. And keeping the rest for emergencies. Make informed decisions by analyzing the company's financials, market trends, and news. Use tools like fundamental analysis and technical analysis to evaluate stocks. Look at the PE ratio, debt levels, and recent performance to gauge a stock's potential. Position sizing means deciding how much money to allocate to a single trade or investment. This reduces the impact of a bad decision on your overall portfolio. Instead of investing 50,000 rupees in one stock, divide it into 10,000 rupees across 5 stocks. Don't let fear or greed drive your investment choices. Always stick to your strategy. Frequent buying and selling can lead to high transaction costs and poor decisions. Don't invest in a stock just because it's popular. Always assess its risk profile. The stock market rewards those who stay invested for the long term. Short-term fluctuations are normal. Keep improving your knowledge. Attend webinars, read books, and follow market trends. Losses are part of the journey. Learn from them and refine your strategy. So, to manage risk effectively in the stock market, diversify, set stop losses, invest responsibly, do your research, and avoid emotional decisions. These strategies can help you protect your money and achieve your financial goals. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon for more insightful content. Comment below with your risk management strategies or questions. I'd love to hear from you. Remember, the stock market isn't about avoiding risk. It's about managing it wisely. With the right approach, you can navigate the market with confidence and success. Thanks for watching.